Welcome to Catalyst Pro Tax Insights. I'm going to walk you through a brief use case to show how the software can help you and your clients with tax planning. In this example, our clients, Donald and Daisy Duck, are a younger married couple. They have an accepted offer on a house and need to decide how best to fund the $300,000 down payment. She has an inherited IRA for the next 10 years. They also have a non-retirement account with enough funds for the down payment. They are W-2 employees making $200,000 combined and save $30,000 a year to their 401k. So let's enter their incomes and their 401k contributions. They also receive $5,000 in ordinary dividends and $3,000 in interest. They do not want to pull from their emergency cash fund. Let's use Catalyst Tax Insights to help make some projections about the tax ramifications of their options. We've gone ahead and entered the base information for their tax projection for the year. Now let's add 3 scenarios to see what their taxes may look like. We'll compare the results once all 3 are entered. First, they could take $300,000 from the inherited IRA. So we'll add a scenario, take $300,000 in qualified withdrawals. Second, they could take it from their non-retirement account, which would generate about $100,000 in capital gains. Third, they could split it 50-50. So we'll do $50,000 in capital gains and $150,000 in withdrawals. We can now see a picture of what their taxes may look like with these various scenarios. Some key things stand out. While their current income puts them in the 22% bracket, fully pulling from the inherited IRA is going to bump them all the way up into the 32% bracket. Using all capital gains leaves them in the 22% bracket, and we can see that all the capital gains are taxed at 15%. The split scenario bumps them into the 24% bracket, splitting the difference. In the tax summary at the bottom, we can see that this increase will bring net investment income tax into play in all scenarios. NIAT is a 3.8% tax on investment income once you reach certain income thresholds. We can also see their effective tax rates at the bottom from 15.1% before taking any money out all the way up to 23.7% if they pull completely from the inherited IRA. Catalyst lets you add any number of scenarios. Perhaps you reviewed this with your clients and they wanted to keep their taxes inside the 22% bracket for this year. We can very quickly, even while sitting with the clients, add a 4th scenario to look at the tax impact. So let's add one to stay in the 22%. I manually did the math, and we need to add approximately $60,000 in qualified withdrawals and $80,000 in capital gains. We now see the 4th scenario has added on, and we can see this pretty much fills up the 22% bracket and yields an overall tax rate of 17.4, somewhere in between the other options. Both you as the advisor and your clients are now armed with a much better picture of the tax impacts of making this decision.